Imagine you start a lemonade stand and it's doing great. So great, in fact, that your friends want to help you grow it, and even own a tiny piece of it. They give you some money, and in return, you give them a little piece of your business. Congratulations, you just entered the stock market. Let's start simple. A stock is a small piece of a company. When you buy a stock, you're buying a share. That means you own a tiny part of that company. If your friend buys 1 out of 10 slices of your business, they own 10% of your lemonade stand. Why would anyone do that? Because if your stand becomes super successful and makes more money, their slice becomes more valuable too. The stock market is like a giant supermarket, but instead of groceries, it's filled with pieces of companies you can buy. You walk in and say, I think this tech company is going to grow a lot. I'll buy 2 shares. That's it. You're investing. And just like prices in a store go up and down, stock prices go up and down too, based on how people feel about the company. You might ask, why would a company sell pieces of itself? Simple, to raise money so they can grow faster. Companies sell stock to build more stores, make new products, or expand across the world. And in return, investors hope the company does well, so the stock price goes up, and their little slice is worth more. Stock prices go up and down every day, but why? Let's say, a company invents something amazing. People want to buy the stock, price goes up. A company makes mistakes or loses money, people sell the stock, price goes down. It's like a big popularity contest mixed with real numbers. Emotions and earnings both matter. Almost anyone. You just need a brokerage account, an app or website that lets you trade. Some money, and a little knowledge, like this video. You can buy one stock or many, and you can sell them whenever you want. Those smart investors usually hold on for the long term. Now the important part, you can make money when stock prices go up, but you can also lose money when they go down. That's why it's important to diversify, which means don't put all your eggs or lemonade cups in one basket. Here's a secret. Over many years, the stock market usually goes up, even though it has some scary dips along the way. People who invest regularly and stay calm usually see their money grow over time. Let's recap. A stock is a tiny piece of a company. The stock market is where people buy and sell those pieces. Companies sell stocks to raise money. Prices go up and down based on company performance and people's feelings. You can invest too, with knowledge, patience, and a long-term mindset. So now that you know how the stock market works, would you buy a piece of your favorite company? Tell us in the comments. Don't forget to like, subscribe, and hit that bell for more easy money lessons on Econo Talks.